Glad to know you're still with us. Nigerian cocoa farmers are facing a severe financial crisis as farm gate prices have crashed by 70% from recent historic peaks. Just months after prices soared to nearly 2.5 million naira per ton, rates have plummeted to between 700,000 and 800,000 naira. This drastic decline follows the recovery of production in Ivory Coast and Ghana, which has eased global supply tensions. Local farmers, many of whom took significant loans to expand during the cocoa gold rush, are now struggling with debt. Without a state-regulated price floor, Nigeria's liberalized market has left producers fully exposed to this brutal global price correction. To unpack this, I'm joined by Akinyinka Akintunde, President and CEO, AFEX Nigeria. Thank you for joining me today.
Thank you, Perpetua. Good to be here.
Good to have you too. Now, this seems to be a perennial issue for commodities. I'd like you to talk to us about factors that are largely responsible for these price swings, and then you can probably, narrow in on the current situation at some point.
Thanks. So it's been an interesting period, and if you take a step back and look at the last couple of years, you've seen prices rise astronomically post-COVID, right? And this has created an artificial pricing structure, if I may call it that, for the cocoa market. Now, the interesting thing about the cocoa market is that prices are globally determined. If you look at the whole structure, you literally have two terminal markets, either in London or in the US, where these prices are determined and where most of these cocoa prices we have locally eventually get filled. Over the years, there's been a lot of players aside the core producers and the core manufacturers who need this cocoa for their production activities and grinding needs to fill this market. So you've seen a lot of institutional investors take positions in the international markets, which has significantly altered the pricing structure. Now, when you come to Nigeria and West Africa as a whole, there are a lot of there are a lot of differences across these markets. You have markets in which government plays an active role in setting the prices and the whole market structure. And then you come to Nigeria where it is more liberalized and you have players being able to play as they deem fit and export in the international markets. For us in Nigeria, personally, I think the market we operate is a very good one where players have the leeway to produce and then sell as they deem fit. I think on a broader level, where I see more structure required will be in terms of how our prices determined. As a country or players across West Africa, why do we need to go and determine prices of our produce in the international markets? How can we work with governments, have a structure in which local prices are determined here? Because when you leave players to volatility in the markets, then a lot of things cannot be protected. I don't want a fully government-regulated market where players cannot benefit from maximum prices. Either approach you go with at any point in time, there'll always be the ups and downs, the pros and cons for each approaches. But the core, I believe we need to focus on will be what is commercially viable and what should be the role of governments in providing access to markets and a structure for them to determine price of these commodities.
Well, that's quite interesting. A lot of things you've pointed to. You're looking at the model operated in some of the markets and then the Nigerian model. For you, it's not really about what happens in that regard, but you are looking at controlling the prices. But can that really be, is that even possible to start with? Because commodities are priced internationally, and there is, I doubt there is anything these countries can do about that.
So I'm not advocating for control of prices. I think we've passed that a long time ago. We're not in a position where we need anybody or any player to control prices. I think my focus would be more around, can we create a market locally, either across the continent or in Nigeria, where sellers of commodities can sell directly into this market and get paid and not necessarily exposed to international volatility. So if you look at it globally, right, the structure, if you look at the international market, for example, right now, a lot of people are actually short in market, meaning they are taking a net sell position. And if you look at the stock level internationally, the current stock level in the market is way below 5-year average at this point in time. So there are a lot of dynamics that doesn't speak to why the market should be dropping significantly as we are seeing it now. I think if you look at the dynamics, right, if you are, prices are usually determined by demand and supply. So if there's short supply in markets, prices needs to go up because demand is critical. Now, if there's oversupply in the market, then you see prices drop. The numbers we're seeing in the international market doesn't speak to oversupply in the market, but yet prices are dropping significantly, which shows that there are lots of noise in the international market that is now being translated and transmitted to local players who are selling directly in the market. Now, is there a structure we can put in place that would shield the farmers that are suffering most from this international volatility on one hand, or on the other hand, can you give them a structure where there's a system where they can transparently sell their produce and get fair prices on the back of this? Should it be driven by the government or private sector or a combination of both? I think both players have key roles to play. On the government, we need to deepen our infrastructure play in the country. So, for example, is it possible to have warehouses across board where farmers could sell their produce and we have the capacity to keep the quality in check for as long as possible based on the commodity? This would involve a lot of government play because infrastructure sits squarely with the government. In terms of supplying the inputs and the whole production activity, the private sector has been doing that. They will continue doing that. But the incentive we need to give them now is a market where they can sell with assurance that volatility in the international market would not necessarily translate to them losing value on one side. And on the other side, they need assurances that speculators in the world of commodities trading do not have to disrupt the market at their own disadvantage.
Right, so many things you've stated right there. You talked about the noise that's probably fueling the price. Now, let's look at the fact that Ghana and Cote d'Ivoire, at some point, they had issues, pests and some other issues that were affecting produce, and because of that we had that short supply in the market and prices were very high. But now that there is a rebound in these two countries, I mean, there are indications that is why we're seeing the low prices, but you have said it's probably just noise and there are other things that are controlling prices. Is there some connection to this really when we want to look at why prices are dropping? Because there is a rebound in these two countries, and that of course is affecting Nigeria now, and Nigeria probably cannot do the 2.5 million they were doing before. We're looking at 700,000 naira to 800,000 naira.
Nigeria is far from the historical numbers we've been doing in the past, which is the reason why I think to a large extent we need governments and key government agencies to help in putting appropriate structures in place that will promote more private investments in that ecosystem. And that's on one hand. When you look at the supply from Ghana and Cote d'Ivoire, the markets they operate is one in which they get to sell ahead their produce. Now, irrespective of the volume that is coming into the market at any point in time, these volumes are usually affected by the next cycle. When you look at the stock level from 2020 to the 2020-21 season, 2021-2022 season, we had high stock level at the terminal markets where we have these commodities. Now, this shows that there was huge supply in the market. Now, this supply in markets usually translates to a new season. And when farmers and producers keep their level of production high, that means the manufacturing community, the grinders in the international market now have a predictable level of stock they can work with. What I see happening right now is more around normalization, around stock volumes. I think a lot of buyers already have huge open stock, but notwithstanding, the huge drop we've seen in prices cannot be explained by just the supply, demand, or grinding volume dynamics. There's just so much out there that we don't have a control on. And which is my point around control. Not control of prices, but rather control of the ecosystem in which prices are determined. All this play in the international markets at the detriment of the supply markets. So the farmers in Nigeria, Ghana, Cote d'Ivoire are the ones bearing the brunt of this decline in prices determined in the international markets. Now imagine for a second, we have a structure where prices are determined in Africa, let's say X Lagos ports, right? If you have that kind of structure and you have qualified players being the ones bringing the commodities to the warehouses, and buyers in international communities have to actually come in here to place their bids for their prices, and we have that, it's going to bring a lot more stability and sanity into the markets. But this approach requires a long-term play by key stakeholders across the ecosystem. So we need to have the infrastructure for processing the cocoa to export quality rights. We need the appropriate infrastructure to be able to hold it for 6, 9, 12 months, keeping the quality intact. We need a price discovery structure in which everybody can transparently see the production prices and the current market prices at every point in time. To have all of this in place, it's not something that would happen at a snap of a finger, and it's not something that you can solve by being reactionary to the markets. The two terminal markets that we spoke about have been around for decades, and they built this structure around their demands. If you look at the countries that are demanding this cocoa that we're talking about the most, they don't even produce it, right? But the demand is in their country. So the price is, the farmers here and the producers here, they try to take any price that is thrown to them from the international market. Now, what I think would work in the long run would be a transition from a demand-driven market to one that is supply-driven on one hand, and on the other hand, is going to be one that would require increased investments in local infrastructure that can do some level of grinding and processing that now ships goods, finished goods or semi-processed goods, to the international markets as opposed to shipping raw commodities. All these moving parts are something that needs to be coordinated with a long-term view in mind, and not just a short-term reactionary play to how market moves, because the markets will always adjust to demand and supply. And when you're in a market in which you're a price taker, you always have the short end of the stick. Yes, there are times in which you can benefit from high prices, but when the high prices comes and goes and you're stuck with huge volume that you've already incurred huge costs to produce, and you can't sell it, then it comes at a huge loss to you. In the market today, a lot of people finance their cocoa trade with bank financing, and we all know that bank financing is not cheap as it is today. These are losses being accumulated on people's books, and for them to be able to get out of it is going to take much more than price stabilization, but even more towards a potential increase in prices. But because we are primarily price takers, that's not likely going to happen. Now, in Cote d'Ivoire, Ghana, the government is really intervening to give farmers a base price, but the question would always be how sustainable is it and how well would it work? Even with the government giving prices, I will still see a lot of farmers not being able to fully absorb the losses, because the government's role cannot cover the whole market, it's limited, and eventually there would still be losers, and the losers will most likely always be the farmers who produces these commodities in the first instance.
And that is something that really has to change. And I like that you also agree that that's something that needs to change. Thank you so much, Akinyinka Akintunde, President and CEO AFEX Nigeria, for your time and your thoughts on the show today. Thank you.
Thank you, Perpetua.